what traits specifically do you see successful entrepreneurs commonly possess?
They're impatient and they need to build something. In fact, when we even talk about it for our firm, because we've built something as well, it wasn't even like a decision. Like you just had to do it. Those are some of the best entrepreneurs because like it's not like they chose to be an entrepreneur. They're like, I gotta go do this.
Hey everyone, welcome to It's a Material World. We're the show that uncovers why material science will change the world. Consider subscribing and hitting the like button down below. It would really help us out. And also, we have a free MSE Company Database categorized by industry sector, location, as well as internship and full-time titles. So if you're interested in that, you can find the link in the description below. And now, let's get on to the episode.
Hey everyone, in this episode we'll be looking at the field of material science through a different lens than usual, venture capitalism and entrepreneurship. To help us do this, we're very excited to welcome today's guest, Julia Moore, the co-founder and managing partner at Breakout Ventures, a venture capital firm that invests in early stage companies that harness the power of cells to build solutions in human health and sustainability. Julia began her career as a public investor and research analyst on Wall Street, and now has been investing in building science-driven companies for the last 15 years. I know you're very, very busy, so thank you for joining us today, Julia.
Thanks so much for having me, guys. It's a lot of fun.
Awesome. Yeah, so to start out, we'd just love to learn more about you and your story. And we'd like to learn more about like what makes you passionate about just the entrepreneurship space and investing in companies specifically with like a bioscience focus, material science focus.
Yeah, no, well, thanks for having me again. And just to give a little bit of context here, I know I'm a little bit different than some of your other guests. And I think that maybe something that ties all of us together is a love for building things. So most folks who have a venture job love building things, when I started in venture, it wasn't really something that I had heard of growing up. So my first kind of job in venture was 15 years ago. And I remember getting into like month one of this and being like, wait, this is a real job? Like, essentially it's the people who end up in venture tend to be insatiably curious, love building things, a bit impatient because you're always moving on to the next thing and trying to build. So I think really not only does it fit that aspect of loving building, loving to learn, but also just, talk about rewarding. You're working with some of the most brilliant people in the world to build technologies that the world needs, especially in the areas that we work in. So to the why bioscience, why this area of investment for us, for me, in the intro, you kind of heard, I've really spent the last almost 2 decades of my career more broadly in biosciences, really starting in life sciences. Life science was kind of the natural place for me to go with my career. I know a lot of folks are thinking about where they're going to head and their parents' influence on that. And a lot has to do with the house you grew up in. I grew up in a MD, PhD house, and the family business was, I guess, healthcare. Also a bunch of, sort of tinkers and engineers in the background, right? Like I'm sure a lot of the homes of folks would be listening. And so, when I was growing up, some of the things that I became obsessed with were around what was happening with genetic engineering. So, cloning Dolly in the 90s and like this kind of new wave of what does that mean for all of us when we can actually edit DNA and change kind of the profile of a living being. And so that kind of set me on that path. And luckily, biosciences more broadly has been a really exciting place to be for the last 20 years because of, some of those changes that I noticed even when I was still in school. And if you think about the role of what we think about as enabling technologies, so the sequencing, computation, genetic editing, all of this that's happened over the last couple of decades, it really creates a whole new intersection or opportunity at the intersection of technology and biology and chemistry. And that's really what we focus on. So we call that in our thesis, we call that creative biosciences. So the ability to create entirely new things at this intersection, but now really on commercially, and because we're a venture fund, right? We think about the commercial side quite a bit, commercially relevant timelines and budgets. So not just we can do it and we'll do some research for 20 years and then hopefully it ends up in a product, but really we can start creating commercial products out of this. And so I'll give you a little bit of a background of how we do it, and we can talk a little bit more. But so for us, what that means, that intersection where that opportunity lies, we really think about both life sciences, sort of traditionally where I started, but with this very much next gen lens. If you think about computational discovery programs and all of these things that weren't the biotech that I started my career in by any stretch. But the other side, we call broadly sustainability, but it's really about creating higher performing, more sustainable materials ingredients for the most part. And, we've really been building this for the last 10, my partner and I have been building Breakout Ventures for the last 10 years. And so what that's meant, you go from maybe more traditional material science into some of the advances in synthetic biology. And just if you think about the opportunity set, think about all the things that we've made out of petroleum over the years, because it was the commercially relevant thing to do. We didn't really have another option, whether from a design or a cost or a time standpoint. And now you're sort of chipping away at that by engineering biology to make some of those same products. And so when we think about the excitement about an opportunity like that, venture, I think by definition is you should be investing in things you couldn't do 5 years ago. So think about all of these opportunities now at this intersection because of where technology is that suddenly is moving into that commercialization stage and sort of how exciting that is. I think one thing that I'll just kind of transition second was, when people think about venture, they often think about watching an episode of Silicon Valley or tech venture, but really this is the origin of venture, right? Like Fairchild Semiconductor and the Silicon movement. It's like doing the hard things with venture is what we're supposed to do. Hopefully what we're doing instead is taking on lots of important technical risk and then really understanding the markets and maybe taking a lot less market risk, because we know if we can build something that there's an opportunity there.
Wow, I just have like so many thoughts. So I'm just trying to put it all together. So I guess my first question then is, I guess, regarding, you said the kind of the opportunity cost, comparing it to petroleum. So right now you're working on building like sustainable and high performing materials and the companies that go alongside that. Are there any like disadvantages that come with that? Like maybe from the cost perspective, does that tend to mean higher costs, or can you match the cost? Because I know that's one of the biggest benefits from the petroleum side is the lower costs and the refined processes.
Yeah, I mean, this is like the big discussion. So in our world, we talk a crazy amount about unit economics. So we think a lot of, especially when you look at materials and ingredients, getting the kind of trifecta right is hard. But we think about, why are we doing this with a new approach? And typically we want to lead with performance. So you don't really want to be investing in something that's just green. As much as it is important and an important part of climate change and everything we're doing. But from an adoption standpoint, you want to think about performance first if you can. And when you think about performance, cost, and maybe can you drop this into the supply chain, right? Like these are a few things that are kind of the first, like when you meet a new company, I feel like that's the framework I kind of say, okay, where are we on a performance? Is this going to help the customer have a better product? How hard is it for them to adopt? Do they have to build whole new infrastructure? Or is this really a replacement that they can drop into what they've already done? Because that's a whole different cost part of the adoption curve. And then there's the actual cost of goods cost part of things. And like anything, you can take aside the inputs or put aside the inputs of cost, think about scale. So you're never going to be at the scale that BASF or, any of the commoditized players are at. So you're always going to be at a disadvantage from a cost perspective. So you really think about, can I get to some sort of cost parity longer term where cost isn't the reason why people aren't adopting? So very often you hear folks starting with premium markets. So think more specialty chemicals than commodity chemicals, like for example, of how you think about pricing, understand like how much of the value of the product, the end product you're making, you represent in that stack. And so like all the ingredients that went into making a leather good or a pharmaceutical product or anything like that, are you the important part? Therefore, can you charge a bit more and a bit of a premium so that you can make up a little bit of that margin early on when you don't have scale. And then in a lot of the areas of, if you think about disadvantages, I wouldn't say disadvantages. I say it's maybe a technical milestone that's exciting that you get to solve.
Like a challenge
challenge. This will be the fun part. Because the technical milestones are the fun part, but there's just as much proof of concept technical milestone from a risk perspective of, hey, does this thing do what we hope it does, as well as sort of a technical scale issue, where it's especially, if you get into some of the areas of fermentation and things like that, where, having that batch consistency, having that scale up, not having a waste product, like you have a lot of waste in that system and in that cost. So figuring out the technical scale aspect of it can help give you more visibility into what your longer term unit economics could be, and therefore be able to, for example, price your early contracts correctly, or be a truly viable player when people think about doing larger volume customer relationships over time. So I think when you start, maybe that's a disadvantage versus petroleum. I don't know. We happen to be talking on a day when oil costs are above $100 a barrel, but I think none of us are waking up and when you think about clean tech 1.0, a lot of people say, hey, we did too much that ended up like, if oil went down, we were screwed. And so thinking about it really as like a longer term performance where you're sort of chipping away at costs to get there over time is really how we think about it.
So you've talked about a lot of qualities that is important for you, such as cost, scale, and some of these other more technological features about green sustainability. One question that we had is that I'm sure there's a lot of companies that look good on paper and, like you said, are like 5 years out. We don't have it for the last 5 years and they're trying to build something new. How does your firm decide which bioscience company to invest in, and what other things that we may not have touched on yet that are important for that decision-making process?
Yeah. So the one thing I was going to say that I want to make sure I say at some point today is we're big believers actually that venture is not the right model for every company. And I'm just going to say that, out loud, because I've spent most of my career working with academics who are brilliant and have something and then are building a business. And sometimes you have something that's a wonderful business and there's a lot of different ways to fund that business versus just venture. So I say that as the beginning part because there's a lot of ways to build a business that won't have to hit some of the things that I'm talking about is my point. So really our job is to underwrite really worthy technical risk against huge market opportunities. And if we can figure this out, it'll all be worth it. But we have to think about it as not everything will work out. So by definition, we have to look for big things. So I think that's one thing to start with is when the qualities or traits that we're looking for in a company, oftentimes it has to be a big thinking type of approach, first of all, where maybe you start with a proof of concept market that's small, and that's totally fine. In fact, usually it's where we want people to start because you can get there commercially faster. You can own more of the market. Maybe you're more differentiated, for example, but it's kind of this gateway to a much bigger opportunity. So of course, we're looking for sort of elegant, differentiated technology. We spend a lot of time diligencing and understanding that. But just as important as that is the business side of what is the demand for that product? What is the market risk? We actually kind of talk a lot about not taking market risk, which isn't really true, but if you think about it in the flip, like we love the technical, difficult to do and hard to understand. And so how many things do you want that could potentially go wrong? Also your go-to-market, for example. So we really look for teams that understand the market opportunity, how they're getting there, who they're going to need to hire. I would say that I'm kind of touching on the team part of things as well. So the interesting thing is like, as many times as I'm a technical investor, and as many times as I do this, I'm like, oh, this is a people business. And things oftentimes succeed or fail because of the people. So we're really looking for, we love backing early technical teams. We love backing technical CEOs, but you really have to think about how coachable, malleable is that person? How much are they So for example, like the example I always give people is like, okay, so you just started this company. You can, from today on, you can't be the smartest person in the room. You have to go hire people who make you uncomfortable because they're so good at what they do, but it isn't what you do, right? Like I don't want you, I want you being literate in HR and everything else. But if you're a technical CEO, like go hire the best at that. Go hire the best in BD or, you know, in some aspect of the technology that you were not trained in. Don't try and do all that yourself. And so I think that we look for those people who are optimists. They're like, I'm going to do this big, hairy, wonderful thing, and I'm going to change the world, but also able to attract wonderful people to build that team because the execution goes beyond just the founding team.
Okay, so I guess just to provide some more context for this episode, then, you know, a portion of our audience may be interested in like starting a company, or even if it's not like venture backed. But personally, like David and I feel like we're passionate about like building organizations from the ground up or growing existing organizations. And I feel like we're not the only MSEs who are like that. And so with that being said, when it comes to growing a company successfully, what are some of the factors that may lead to a company failing versus succeeding outside of what you already mentioned about the team? I think that's really important to mention.
Yeah, no, I think the team, it's so funny, right? You look back over your career and you do all these, like you wrote a memo and you thought you got the risks right. And you know, every now and then you get blindsided by something or you underwrote the risk and the thing that you thought had a, you know, single digit percentage chance of happening happens. Very often failure is a mix of people making decisions at the wrong time, or, you know, it's kind of multifactorial very often. I actually did this, I think it was a couple of weeks ago, or maybe last week, had some quotes on the biotech side of our world in a piece saying, you know, why the surprising reasons why early stage biotech companies fail. And I think that because we work with such technical founders, some of the things that we pointed to was the very early stage companies that come out with a, you know, it's very often for a lot of our companies to start with grants. They're often coming out of a lab. I wouldn't say it's 100% of our companies. Maybe these days it's half and half, you know, some technology that was sort of incubated within a lab and got the benefit of non-dilutive funding. And then they kind of, you know, move towards commercialization. So a very common thing we see is this like grant mindset early. And part of that, it's normal. And we think of ourselves as a bridge sometimes, but you need a lot more buffer when you're running something with venture-backed money, or you're growing a business at all, even if it's not with venture-backed money. So you can't think, okay, I've got this project. These are my exact costs. This is my exact timeline. It never works that way. Everyone's more expensive. Like you go to hire someone, it always takes longer. They're more expensive. You can't get the time with your third party the way you think you can. Your contract goes up. You know, you have to go raise more money. I mean, the very common thing we see is you know, get a couple $1 million in the bank. You have a project that's sort of like a de-risking proof of concept. So you're like, great, I'm going to go do that. And then like on, you know, the last day you have cash, you get your milestone. And then you're like, oh, I'm going to go fundraise now. It's like, oh, that can take 6 months, right? So at the earliest stages, a lot of I would call it more failure to launch, where it's just that transition to moving quickly, thinking about having more budget for things, thinking about hiring ahead. You know, you just have too many workflows in your head, the way that you're transitioning from just thinking about the technical milestone ahead of you to really thinking about all these different workflows that you have to kind of, maybe like, you know, plates you have to keep spinning. So I'd say that's a really common issue. And then really, I think that one of the fascinating things about our job and why I love working with entrepreneurs and with founders is there's a lot of personal development that happens in founders over the life cycle of a fund. And the folks who go into it sort of optimistic about what they're building and sort of willing to really learn and take feedback and say, hey, I'm going to grow into this next phase and this next phase and this next phase. You know, it's hard to find. It's a really hard skill set, but it's I think the thing that makes the biggest difference in a successful company.
Yeah, I remember hearing on a podcast it was just a phrase that really resonated with me. It said, what got you here won't get you there. And I think that kind of ties into this like idea of personal development. If you want to achieve your next goal, then you'll have to develop yourself. So that's really great. And I guess before we get into more of like a case study with CheckerSpot, which is a wonderful partner of ours, I wanted to briefly dive into a unique role that material science, chemistry graduates may not think about when it comes to a potential career path after school. So you mentioned the idea of due diligence, and I know Breakout Ventures actually has a couple PhD graduates in neuroscience and chemistry to provide a different perspective. So can you kind of go into what exactly they do and why their role is very important for Breakout Ventures?
Yeah, absolutely. And I'll talk about our team in a second, but I realized it'd be a missed opportunity and not say we also have a fellows program that we've been running since 2015 of mostly PhDs, postdocs, master's students. Oftentimes it's a way we'll have kind of 10 at a time on entrepreneurial campuses that we want to know what's going on. We can't be on, so we want someone who can go to things and have a sense of what's happening in sort of the entrepreneurial ecosystem. Sometimes they're working on areas in their own research that's kind of on the cutting edge. It's really good for us to hear, hey, here's what you're seeing companies, but like we're already figuring this out, in the lab or something I've been working on. So I say that just because I think it's an important part of us building into the ecosystem and staying connected, but also how we met one of our associates who's been working with us since 2017, actually, during his PhD at Georgia Tech, Nima. And so I'll give a little bit of context to our team and maybe the evolution here. I think that, a lot has changed even in the last 10 years, just the same way that, there used to be the technical founder and then the business person, that's changed. Like, how do we look at that technical founder as someone who can grow into these roles and learn these different pieces? I think similarly, what we're hearing and seeing is that like pressure to stay in the academic path when you're in grad school isn't as strong as it used to be, or, in STEM in general. We would have PhD students like, covertly talking to us because they didn't want their PI to know that they're considering, starting a company or something, and I think that's just changed quite a bit over the last 10 years. And you're seeing entrepreneurial ecosystems touch those folks earlier. So maybe it's unique, but it's shifting as well. So I think that if you look at our team, we sort of joke about our team that we're broadly a team of deep generalists and extroverted PhDs. And that's like our internal joke because we think about no one really has a specialty in the things that we do. We oftentimes are at the intersection of a couple of different disciplines, all new things that, even if your academic work is a few years behind you, it might be stale already, right? So we really think about people who have big brains, who devour learning new things, forming opinions quickly, can like flex their deep domain expertise one day, but really thrive at this like learning to learn and get technical concepts quickly. And so a background in STEM and a background having gone deep in certain areas is obviously great training for that. So on our team, I think I spoke to Nima, who's our associate, who's a PhD in chemistry, between organic chemistry and chemical engineering from Georgia Tech. And he started with us in 2017 in this kind of fellowship type of capacity. And the day he defended, he came cross country to work for us, which was really exciting for us. Dana, our principal on our investment team, she's a PhD neuroscientist. So, neuroscientist by training, started, but like early signs of this entrepreneurial bend, like started her own company early on and now has spent her career more on the entrepreneurship and investment side. So, we benefit quite a bit from their deep domain expertise. And yeah, of course, if there's a neuro company or, we were talking about fluorination and defluorination yesterday, and like Nima's like on it, right? But at the same time, we benefit from just their broader ability to think. And there is no such thing as just taking your your deep domain expertise and doing it every day in this job, you have to be thinking quite a bit bigger.
Yeah, it seems like you're creating a cross-functional team of people who are very cross-functional. So it sounds like it's a very interesting group of people to work with, and I'm sure it's very exciting when everybody's moving so fast. But yeah, we want to dive into the case study that Praneeth was talking about. And so to give more context, Breakout Ventures, your company, has actually funded one of our sponsors, CheckerSpot, who we thoroughly enjoyed collaborating with. We just would like to see the input because we've heard a lot about CheckerSpot and some of what they do in previous episodes. Now that we've seen the science side and talked more in depth on that side, now we would love to hear how you found them, how they look to you, and exactly what excites you about the innovation and growth potential of the company.
I have to see if like Charlie and Scott are listening. This is going to be like someone telling the story of how we met, and then they have a different version. Let's see how this goes. But I really enjoyed listening to your piece with Scott. Was that maybe a year or two ago?
I think it was episode 11, I believe.
Yeah, Scott Franklin, one of the founders of CheckerSpot. I actually think that we met them very early on when they were starting CheckerSpot. At the time, we do seed and Series A checks typically. So early stage, we're kind of anywhere from a first $500,000 check as you're starting a company. So $500 million or maybe a $6 million check for a company that's maybe gone through that first iteration and first funding and proof of concept and is scaling.
Real quick, Julia, can you define like Series A funding, Series B?
I knew I was just going to screw that up for myself. I know it's all so dumb. It keeps on changing. It's confusing. Think about seed funding as, it's hard to put numbers on it these days, but think about it as that first funding that you get to kind of do some proof of concept work. Say, in a lot of cases, we're sort of recreating something that, from a lab or literature and trying to say, yes, this works, or we can recreate it. Starting to get a sense of the productization of it. So a seed, in some cases, like seed funding might be these kind of quick few $1 million in our companies. It also comes with, typically people are doing SBIRs, or so if the commercialization grants at the same time. We love non-dilutive money. We have some companies that have more non-dilutive than dilutive money. And when I say non-dilutive, I mean grants, things you don't pay back. My money is dilutive. So I'm taking equity, right? So we really think about the benefit of the space that we work in being that you can use both, right? You can use non-dilutive money, which is more restrictive and a little bit harder, but that it has an important role in helping de-risk. And so you might do a few $1 million, some SBIR grants, some other maybe grants specific to your space to kind of get your technology off the ground. And when you have a little bit more to show for it, you have a proof of concept, you have a plan of your go-to-market, you start to think about that, what the future of your company will look like. You oftentimes go out for what we typically call the Series A, which is kind of that bigger round where you're starting to really grow the company. You might get, if we have people who listen to a lot of venture podcasts, all the words are getting confusing right now because now we're doing $20 million Series seeds, and because people are just playing with the words. But think about it as your early money is kind of your seed, and then kind of as you're starting to really build the company, it's Series A. We call it kind of the first institutional rounds, where it's more money that is in an institutional structure, like a venture fund or something like that. So just for that concept. So for CheckerSpot, which did seed and then Series A, they didn't do a huge Series C. That was before that time. I think we met them early on when they were starting. One of my colleagues did, and kind of got a sense of what they were working on and what the next kind of couple of years might look like. And I think maybe they were considering doing some other work with Illumina and some others to sort of better characterize the platform. And then really got to know them again as they were thinking about their Series A, which, oh gosh, now I should have written this down. I want to say it was like 14 million. And that Series A, part of what was interesting there is we were kind of these, over the last, call it mid 2010s, these weirdos that were doing sort of like bio and material science and always had trouble explaining what we were doing. Now it can say, oh, tech bio or deep tech bio or syn bio, like all these things that now are a little bit more mainstream. But we have been building these types of companies and forming our opinion, frankly, on business model. There's a lot of things, and we can talk about this separately. There's a lot of things about traditional material science companies that aren't venture backable. This whole like couponing process of like, you don't know what your customer is making and they give you specs for it and you go spend a bunch of time working on it. You have no clue how to price it. All the power's in their hands, all the timelines in their hands. Like it's not a great venture business. And so as we looked at the material space in particular, we were moving towards folks who are really thinking about disrupting that business model quite a bit. And so when CheckerSpot was coming out and they were telling this story about, so we're a material science company that makes skis. Most people are like, what? No, so you're a consumer company. And it's like, no, we're a material science company that makes skis. And there are very few of us who are kind of like, oh, I want that. And we had been, like I said, working in material science, some of our earlier investments, Modern Beto and some of the others, where we had been living the front lines of the customer adoption and that those partnership discussions. And really, I thought, I don't know that Charlie and Scott have used this language, but I really thought of, the Wonder Alpine brand, which is the, I'll give the context for folks who haven't listened to this. CheckerSpot is a broader material science platform that is engineering microalgae to produce, novel bio oils. And really the advantage that they have is that they not only have a very strong technical platform, but they are really looking at the full applications development, animation of the product. And so they know how to make something out of their new oil profiles that really helps them in the conversation with business development. So Wonder Alpine was really where they started as what is a product, like an end product we can make that shows we really know how it helps us iterate and learn quite a bit faster on the benefits or design aspects of our platform. And they started with backcountry skis. So Wonder Alpine is their backcountry ski brand. And I kind of like joke about it as like the Trojan horse, where you're like getting in to be able to say, well, we've already, with a B2B partner, with a business partner, we've already made that. We don't have to do this couponing process with you. Like we've made a product out of this. We understand it. Here, let me show you it. And just like how much that throws a potential business relationship off. They're like, oh, wait, we aren't just buying something from you, we're designing with you. And just how much more interesting that is if part of the goal here is to sort of blow up the antiquated business model. If you're doing something high value and exciting, and you really have the opportunity to be a longer term strategic partner to the businesses that you're working with and the brands that you're working with, you kind of have to blow that up and having something in hand that you can show that you too are an applications developer and that you can do that in partnership, I think was really, really attractive to us.
I think now that we've talked about some of the funding rounds, I had a question specifically about some startups. So I worked at a startup, and one of the biggest takeaways I took from it was that they are ruthlessly results oriented. And the emphasis was that in 6 months, we need data to show the investors, or else we won't be a company in 6 months. And so so that's probably a little bit of an overstatement of how intense it is. But from a startup perspective, it really is fail fast, get as much data as possible, and continually don't waste time, like find the shortest path to success. So from the venture capital point of view, how does that mindset affect some of your decisions? Now that I've seen the startup point of view and how we want to present to you.
Yeah, it's interesting. So as like a little piece of my career, I built an institute at Stanford. And I remember, when we were talking about the benefits of the Bay Area ecosystem and stuff, where we talked about like having enough money to fail, which also means that people were, there's some great, for anyone who's into ecosystem analysis and stuff, there's probably have it actually right here. Regional advantage. It's this, it's actually a woman's dissertation from like the 90s looking at the inputs into the Boston ecosystem the Route 128 versus Silicon Valley, and like what were the different, patents, PhDs, like all of these kind of hard inputs that go into like what should have created value. And it really ended up being some of this like less tangible stuff about like, comfort with failure. And there's also, things about, non-competes and, you can shop for a job. Like people are always afraid to lose people because they could go to a new job any day. But I do think when you talk about, hey, we won't be a company in the next 6 months, that kind of ruthless focus on milestones is an important part of building something. You have to kind of prove your value at every step of the game. So I think, something that we oftentimes do with early stage companies or share our thoughts with folks who are thinking about starting a company is kind of this like map of money versus value. So really thinking about, you're creating a multi-stage process of like, okay, we're going to raise this much money, dilutive, non-dilutive, to figure out this thing, which then unlocks us to figure out this thing and this, which costs this amount of money. And so it's kind of this stage and really mapping out, not just like, we think of, I think people see in the news that funding rounds have almost become a milestone in and of themselves. They are representative of another milestone. So you don't raise the money until you've sort of de-risked and proven that you're on a better path. So maybe one of the ways that we really think about it is when you're early stage, you of course have a lot of risks. You have technical risk, you have market risk, you have all sorts of team risk, like everything. You're early, it's all still ahead of you. And so the question is, how do you knock down those risks such that it's more and more clear of where you're going and your ability to get there? And in deep tech or more technical companies, that's all. Like the goal for us is to say, let's throw all that hairy technical risk at the beginning. Let's take it on head first. And then once we know there's something there, it's like, and you can just really like fund that and grow that. But those early years are all about technical de-risking to show people that, frankly, there's less and less of a chance of them losing their money.
Cool. So I guess going back to CheckerSpot, I was just wondering, what did the vetting process look like with this company? And I know we talked about like, it was really cool that they had this application already, the skis. How did you take that and look at potentially next steps and the larger like market opportunity as well that comes with their technology?
I think that when we think about how we diligence CheckerSpot or another company at that stage, I find myself saying this in diligence a lot. There's like I just said, early stage, there's a lot of risk because you don't really, everything is, the story is still to be written, right? So you can say whatever you want, but the question is, are we going to be able to achieve that? So in a company that was as early as CheckerSpot was when we funded them, you're also diligencing, this is kind of the surprising part. I think there's the known parts. You're going to go into making sure that you understand the engineering aspect, the platform, the capabilities, the interest, understanding some of the customers and their interest in those oil profiles. You're going to do all of that. You're going to talk about, how do we underwrite that proof of concept risk, which was a little bit less, it's a little bit more the scale risk and the go-to-market risk and all of that. So you're diligencing all these aspects. Frankly, we're picking up the phone. I mean, a big part of our job is people. And so, working as long as we have in a lot of these spaces, it's, who's that person that we worked with at that large chemical company or someone that we started this company with and starting to network towards the specialists that you really want to hear from. You don't want to oftentimes we back people who are experts in what they do. So it's not like, I think sometimes people think of venture diligence as like a gotcha, like you're like, oh, you're wrong, you're not going to be able to scale. But it's more treating the technical founders or the founders in general, like they're the experts in what they do. So we're trying to make sure that we understand it really well in a way that we can underwrite what risk are we taking here. And the thing that I think might surprise people to think about is like, especially if someone, I wouldn't be surprised if a bunch of people are thinking about management consulting careers or things like that, where it's a different side of business where you're analyzing a market. The thing that I didn't really learn how to analyze earlier in my career is how people think. And that's like a really big part of early stage diligence, because the plans will change, the obstacles will change. And so you're really diligencing, how does that early stage team think? And are they the people that like will take on that challenge and think about it the right way? Are they thinking about their market entry? So as they get more information in a business development process, for example, are they cycling that information back and making it valuable and sort of, changing course a little? So that's kind of maybe a surprising part of diligence that people don't think about, is that there's a lot of diligence of just sort of how that early stage team thinks and how they're going to operate in the future.
Interesting. Yeah, you tied it back to management consulting, and I had like a few interviews last year, and that totally makes sense. It was like, how do you think? And that's where engineers can kind of offer unique value too. We've just naturally had problem solving experiences through our research and past internships. And so it is just like looking at knowing the problem at hand, and then just kind of trying to identify the root cause and coming up with ideas. So that's really interesting.
No, and that's like a career, studying STEM and like career in STEM is all about like learning how to learn and how to think. And like I have kids, and my husband and I joke about like, only way you beat the robots, right? It's like, be good with people and critical thinking.
Agreed.
Then yeah, thanks for walking us through that. It was very intriguing to see how a venture capital firm like looks at companies and tries to fund them. So another aspect that scientists may not think about enough is, after an incredible discovery, how do you properly add business value and showcase the potential of something you created? I think one of the tropes is that, scientists can create all these wonderful things in lab, but transferring them to an actual product is incredibly hard. And to make an actual business and actual product from a lab idea is very difficult and takes a lot of people, and it's not as easy as one might think. What advice would you give to someone who has developed a material with completely unique properties, but doesn't exactly know how to take that leap from the lab stage to an actual product?
Yeah, I think it's interesting, because if I think about the typical approach that you think about, so I've developed a new product or a new material, has these great qualities. I know that's really interesting, because this is I've been in a lab, I understand, this space, and I know that's exciting. And then the question is to kind of step outside of the context that you are in for a little bit and think about, okay, who are the other stakeholders and why would they find it exciting? So not just, I'm going to win some credibility among my sort of academic peers, which very often, you will, but then really being able to characterize it, not talking about it in that context, but really talking about it in the customer context of, well, why does that matter? And we actually often ask the question, like it's kind of maybe a bit crass, but I say like, who with deep pockets cares? And it's sort of something we say internally, but the whole point is like, that's the pull part of what you're doing. And so I think that it can be hard to get some of that information up front. Sometimes the obvious place to start is, you try and get a report, you try and understand, what are the big companies doing? But oftentimes the part that I find the most useful is if someone comes to me and says, so I have this thing, I know it's really unique. I have some data that supports like there's demand for it. And so I went out and I just started talking to people. And here's part of what I learned in that process. So I think, anyone can go look up any of the customer, if anyone knows anything about design thinking or those sort of like customer discovery processes, giving that kind of narrative to what you learn and like why someone might be interested in it is a really good way to give more context from like multiple stakeholders' point of view. And I think people don't do that soon enough sometimes. Like everyone's getting much better at it and much more aware of it. But I think that is really a big difference. If someone were coming to me with a new idea with properties, if they're answering the so what early, that's pretty interesting.
Yeah, there's definitely like a storytelling aspect that ties into it too. So I was just wondering, from the customer discovery, you mentioned that specific aspect. Can you go into more detail of what that kind of looks like, either through the process or what you like to see in terms of like feeling confident that there is demand for a potential application tied to some material innovation?
Yeah, I mean, it depends on what stage of company, of course, but let's say we're kind of in this seed stage. I think that what we like to see is, sort of early proxies for future sales. Does that make sense? So if like a proxy for demand later is selling something and revenue and contract, then kind of move that one step back. It might be some sort of like pilot contract or material transfer agreement or something like that. And then move that back one even more. It does end up being like customer interviews. The same way, sometimes for like an SBIR or something, you'll have a customer sort of letter of support. So it's kind of like, what's that question? This is something I want to see in the world or I would be interested in. So what's kind of that equivalent early on? Can you really say, hey, I talked to this person within this business unit and I learned a lot about their buying process and their development and what they're interested in. And oftentimes you have to be careful because like, if you just build for them, I think like there's some famous like Steve Jobs or something. It's like, you don't build for what people tell you that they want. You kind of start thinking about it together with like where things could go, but you can start to really put words to and do, to your point, that storytelling around here's a real bottleneck that they have. So maybe one thing to think about that we haven't introduced yet is this idea of urgency. So a lot of times in a business unit, someone might say, oh, it'd be great if I had, but then have them rank it, because oftentimes the lack of urgency is actually the thing that kills your timeline. Because there's someone like a scientist in a business unit being like, oh, I'd love to have that, but it's not even on their top 10 list. It's not on their top 100 list. It's kind of, and definitely not for the firm or the company. So if you think about things that are like unlocking new markets for them, or it's been like a bottleneck because you just can't do this with chemistry, or you just can't do this. And then you're kind of being able to say like, hey, I can do this thing. And now what would you do with it? So actually that's a question actually that I find fascinating, is like when people not only do customer discovery, but say, hey, I'm giving you this thing that you didn't have before. What cool new things could you do with it? And start to kind of explore that white space a little bit, because these are all for-profit entities and they're all trying to think about, your customers for the most part, unless you're going to an academic customer, which is a whole different thing. But you'd ask the same question, like an academic R&D customer, of what new things could you do with this? How could you imagine your business growing or making new things? Or would it benefit one product line or multiple product lines? I think that's a really fun part of the discovery process.
Yeah. No, that's awesome. I've definitely learned a lot, and just it is a completely new lens of looking at things. So I've really enjoyed this conversation so far, and I guess we can just quickly wrap up just to hear your perspective on why someone might choose pursuing an entrepreneurial path over industry or academia, or like after academia or industry, and what traits specifically do you see successful entrepreneurs commonly possess?
I think I started saying earlier, there are some aspects of like what makes a VC, like personality aspects of what makes a VC. And I think similarly with entrepreneurs, typically, especially technical founders that we've backed, they're impatient and they need to build something. In fact, when we even talk about it for our firm, because we've built something as well, it wasn't even like a decision. Like you just had to do it. Those are some of the best entrepreneurs, because like it's not like they chose to be an entrepreneur. They're like, I gotta go do this. And honestly, that's not for everyone. It is a very hard job to start a company. It is exhausting, and you wear multiple different hats early on. It doesn't pay very well at the beginning. Hopefully if you hopefully if you the whole idea is like you own equity, as we often ask, like your greatest asset is your time. What are you spending it on? And if you're saying I'm investing my time, my greatest asset, in this company because I know it's going to be worth something, like that, that's really meaningful for us to see. And so it's just, I think there is a very different energy and a pace than industry or academia, which each have their own. So, pace and style. So like, it's not for everyone. It is hard. It is so fun. You work with the most interesting, brilliant, collaborative people, but yeah, it's not for everyone. it's not a 9-to-5 job by any stretch. So, I had a colleague who would talk about reading or writing a journal article and then thinking to herself at the end of it saying like, oh, and hopefully this paper gets commercialized someday. It's like, if you're the person who reads that and is like, oh, like this drives me crazy. I need to go do this thing. I can't just write a paper about it. Then you're probably pretty well suited to being an entrepreneur.
That's awesome. Yeah, I know there's like a risk element that comes into play, and then you kind of just have to like love the process, even if like the results don't show up immediately. It's kind of like delayed gratification of sorts, but really just kind of falling in love with the process, at least from what we've seen, just building this podcast and related like online courses and things like that. But yeah, I love that answer. And we really enjoyed having you on today, Julia. It was a pleasure. So yeah, thank you so much for your time.
Yeah, thank you so much for having me, guys.
As a materials engineer, we can make an impact in nearly every single industry. But with that versatility comes a lot of different options to choose from. So if you have no idea which industry or position is right for you, believe me, you're not alone. I've been there, done that. But just for a moment, imagine narrowing down your ideal role and company by the end of this week. Imagine being able to secure your dream job offer without having to apply to hundreds of job openings. Our online course, MSE Academy, includes video testimonials, resumes, interview prep, and mentorship from materials engineers who have been in your shoes. We also connect our members with companies and industry professionals in our expansive network to help accelerate your job search as much as possible. To learn more and get started, simply click the link in the description below. And if you enroll within the next 24 hours, we'll add 3 bonus career development resources. I hope to see you there.